Thank you so much for stopping by my channel, 521 Investment Wealth Builders. Now, the U.S. Central Bank lowered interest rate for the first time in 4 years on Wednesday, 18 September 2024. Again, it's been 4 years since the Fed started to cut rates. Now, the Federal Reserve reduced the key lending rate by a half of a percentage point or 50 bips to a range of 4.76 to 5%. And the Fed's target is to get to 3% by 2026. So we're in the range now of 4.76 to 5%. And the Fed target rate by 2026 is 3%. So we know the Fed has to reduce rates some more. Now, this has been on the news all week, but will these cuts and projected cuts benefit you or I? Again, this has been in the news, but how will these cuts benefit you or I? Now, the Fed's key lending rate is what it charges banks to borrow money. Banks can borrow from the Federal Reserve through what is called the discount window, which helps commercial banks manage short-term liquidity needs. Now, you probably didn't know, but the banks, sometimes they have to borrow money. Now, they want us to come in and make deposit, but when the bank is short on deposit, it can borrow from other banks or it can borrow from the Federal Reserve through the discount window. As we know, the primary funding source for most banks is deposit. Now, this cut will influence mortgage, and if you have a mortgage, credit cards, and savings rates for millions of people in the U.S. and around the world. Now, I'm going to share some information that I read from Wallet Hub, and this is the average credit card debt. I want to talk about credit card debt a little. The average credit card debt per person is $6,501, and I'm talking about information from the second quarter. The average household credit card debt is $10,680. Listen to this. The total credit card debt is $1.28 trillion. Over the year from 2023 to 2024, it's up 3.65%. Now, as the prime rate decrease, credit card issuers may lower their variable APR. A small decrease can lead to some savings over time. Other words, as the rates begin to kick in, and it's up to if you have a credit card who issued the card and you have a variable APR, you may begin to see a small decrease in your APR, but you have to give it some time. Now, on the next video, I will discuss how I will be positioning myself as an investor to profit from the rate decrease. Because, again, the Fed cutting rates, that's one thing, but investors profit from the rate cuts. And that's what I will be discussing, how I will position myself to profit from the rate decrease. Why have rate decrease if you can't profit from it? Now, this is what I will be doing, and not advice or investment advice for you, because you have to make that decision on your own. But I'll share with you what I'm going to do. Now, I want to share two experiences. One, credit card. Now, over the last year from 2023, I said, this is what I'm going to do. 80% of whatever I purchase or buy, I was going to put it on my credit card and see how many points could I get. You know, and then you could, someplace you could turn your points into cash. So what I did for months and months and months, I think I got up to like 9 or 10 months, or 75 to 80% of everything I did it on my credit card. But what I found out, what happened to me, that I lost my consciousness of being an investor. In my mindset, I just became a consumer because it was so easy for me just to pull out my credit card and just use it. Actually, I had the mindset of a consumer and not of an investor. And I'm not saying you shouldn't use your credit cards, because I have a credit card. But I have changed my strategy now. I only use my credit card for a major purchase. And a lot of people don't believe in credit cards, and that's up to that person. Some people only believe in using your debit card, and there's something wrong with that. But I believe you can use your credit card and you can leverage that card as an investor and profit from it. I believe you can do it as long as you don't have the mindset of a consumer, just buying and buying and buying. Again, so now I only use my credit card just for a major purchase. Now I go back to my debit card. Now, I bought an SUV and I got a loan through the credit union where it is my major financial institution. I got a loan for my SUV. It's a really nice SUV, a really, really nice SUV. And I had to finance the SUV. So remember, the Fed started reducing rates on Wednesday. So I called down to the credit union and talked to the vice president of the credit union and asked that person, it was a woman, how would this affect me? And she said, when I signed my contract, and to be honest, I forgot about it, that I can go back in and renegotiate my interest rate if they begin to drop. And she said, I told you that, and be honest, when you're getting a loan, you're not listening to all the people saying. You're only picking up bits and pieces. And she said, I told you that, and I didn't remember, but now I'm conscious of it. I know now. So what I'm going to do, I won't go down and renegotiate now, because I know the Fed is going to lower rates some more, because the target rate is 3%. So I'm going to take advantage of this. Again, I'm going to take advantage because I have the mind of an investor. And an investor takes advantage of opportunities when opportunities come. Again, and an investor takes advantage of opportunities when opportunities come. On the next video, I will be discussing how I'm going to position myself. In other words, the process, the structure, and the product of what I'm going to be doing. Again, the process, the structure, and the product of what I'm going to do to position myself to take advantage of the rate decrease. Now, please subscribe and share this video. Until we meet again, peace.